Hi, Warriors. How's everyone doing? How'd you handle gravity yesterday? Paul, Richard, AJ, Bran, everyone doing okay? Team?
Swimmingly.
Okay, so pretty interesting action happening. In fact, I guess we have to say that a new trading pattern has emerged, right? We had volatility while Blake was at the helm. He wasn't away. You weren't away, man. So here we are. All right, so here we are. I mean, it's trying to hold this very important level. Maybe a weak dollar, and Microsoft saves it, but looks kind of ominous to me. Right there was led by things like semiconductors. So here's a look. They'd already, were on their way. Here's NVIDIA. Nice little 3 drive to a top here and following through, and SMH is even more advanced. Here's Microsoft. I don't know where it's going to open. I guess they beat big. Not sure. Last night it was all the way up here, I think 289 or so. So we'll see. Anyone know anything about the beat? It looked like the way the market reacted in the aftermarket, that it was a huge beat. Oh, and something else I know we don't normally talk about, but I've been, keeping an eye on it for a while. There's a third drive in wheat. It's pretty clear on the daily.
Wheat or wood?
Is it wheat? So, so if you get a blue candle today, that's a signal, and then he risks the lows. But pretty glaring divergence here. 1, 2, 3. So, and it's really gotten cheap, compared to like oil, what it did. It almost has an identical chart pattern as oil. Oil made a new high, and then on the invasion, it was a failing rally, and then, it went down to $70. Well, wheat's kind of doing the same thing. So even a bear market rally, $8 wouldn't be, unreasonable on a turn if we get a turn.
Hey, Dale, you asked about yesterday's earnings and Microsoft and Google. They were both really strong. Actually, Google, one thing that we were watching here and talking about yesterday on, the daily roundup and the morning edge is looking at Google's ad revenues. They're about 56% of total revenues of Google. And they came out strong. I was wondering if that number would tail off a little bit, because it'd be a little bit of a tail, of maybe U.S. companies pulling in the reins a little bit, but we're not seeing that in Google, and I think that's kind of impressive. Also, just want to let you know, we have, and I'm not going to give out his name here, but we have a pilot for UPS. It's in our chat room, and just was like, hey, look, things are really kind of slow here. That's a little bit of a warning, because we've talked about earnings, or FedEx or UPS, when things stop moving around the globe, that's not a good thing for global commerce. Obviously, that's why we always watch like UPS and FedEx earnings, listen to their conference calls, or at least read what the highlights were, because if those things are a little bit, if there's some warnings there, that is a bit of a risk for the economy. But anyway, I'll let you go on.
This is the economy chart right here.
Yeah, Dr. Copper looks ugly. Yeah, it really does. I mean, it is and quickly, risk of falling here.
Quickly did this in about 2 weeks.
Yeah.
So
while of course Aussie and Kiwi have been breaking down at the same time.
Yeah. So what do you guys make out of what's happening with kind of interesting? It was earlier, metals were down with the weaker dollar. Yesterday looked like maybe this was a higher low. I still think it wanted to panic people under 100.
Yeah, well, the dollar is seeing a lot of volatility, and so are metals. Some headlines about First Republic, some comments that it's going to get taken over. So you're seeing a little bit of volatility right now, but I think there's more volatility in the dollar right at this moment based on some things that K-Man's been talking about the last couple of days. So I think he's going to have some good commentary on what's happening with the dollar as we head into month end that he's been mentioning for the last couple of days.
Okay, so K-Man, good morning to you, buddy.
Yeah.
You want to repeat on F.A.C.E what you said on flow?
No,
you get to rehearse. You get to rehearse for F.A.C.E on the flow show.
Yeah, that's the rehearsal, right?
Yeah,
it's where I'm making all the mistakes, so that on F.A.C.E I can only say the right things.
well, you do there too, but let's call it a warm up then.
Oh, yeah.
It's a warm up.
Next we go to Vegas, Dale.
All right.
No, I think it's as usual, value date month end. We've seen the other side of it in the euro and the sterling this morning being bought up. I think the European asset managers must have had some stuff to do. We saw the euro crosses taking another leg higher, the sterling crosses taking a leg higher. But usually, value date month end, we should see a bit of U.S. corporate interest, and we could easily see a bit of the other side, a bit better dollar into the London fixings, perhaps. It did work pretty well the last few months, and then afterwards a new market can start again. But yeah, if the tradition is respected, the dollar should be a bit in the next 3 hours or so.
Oh, okay. I don't know. It kind of looks like destiny for an emotional number coming into the dollar before it turns. I have this line. It comes in just a shade under 100. 99.60, 70. I'll be, looking at that because it looks like new highs in the euro are. Did we make them or?
No, not yet.
All right. Well, this was a confirmed high up here, but we get I'm thinking 11.5 or so.
Yeah.
Against 112, I'm a seller in euro.
There's there's quite a lot happening in the 112s indeed, or call it from 111.75 to 112.5. There's quite a bit happening up there. So good seems to be a decent level up there to closely monitor.
Okay, and I guess really the big event is this for today. So most of these moves in the currencies aren't happening here in the States. That's something I've noticed that we may try and fade. What's that?
So many crosses going on in the European market.
Yeah.
It makes the picture perhaps less obvious, because if you look at the dollar versus the yen versus the sterling versus the euro has been actively sold in our morning. But then if you look at Aussie, Kiwi, CAD, it barely moves, or the dollar is even a little bit stronger against them. So
one other thing stock wise I wanted to mention was Apple. So Apple, to stock traders and money managers and people in retail, that are retail traders, it's like an ounce of gold for them. Okay, it's a safe haven.
It's been for years.
It's the most crowded trade on the board. People say, I'll never sell my Apple. Well, we'll see if they sell it or not. It failed from the top of this big triangle so far.
People had equivalent feelings for Nokia at some point in the past, right?
Yeah, it's different though. Apple, hey everybody, they make a lot of stuff, and there's the rumor flying for ages now that they're going to make a car to rival,
yeah,
Tesla.
I know. I don't.
If they do that, their business model
with you.
changes a lot, and I think it's going to be really a very strong company still. So
I don't disagree with you, and they've managed to, in essence, establish themselves in several ways. So they're diversified, and they're looking to diversify even further. That's a big difference.
Well, Tim Cook went to India to kiss Modi's ass because he's worried about China. And so, my belief is that we might not have a great earnings report for Apple, and that China is going to be a disruptor of Apple's business model in some way.
In any case, Apple is a cash cow.
It's a descending triangle. It tested the top. If it ever gets under 130 again, and with a big bear move in the market, it could happen. I'm just saying people feel safe. This doesn't look like a safe level to me in Apple. So you could like it. You could eat it with a worm inside for all I care. I'm bearish Apple.
Yeah. Could well drop, obviously, but I think Apple will be a buy on dips in the medium term.
Yeah, at 80.
Yeah,
I'll buy it at 80. Okay, so in the medium term, I'd be buying it back at the COVID levels. So anyway, that's it. Blake, you want to come in? I think I'm a little irritable this morning.
Yeah, you sound irritable. I'm definitely not gonna eat an apple this morning. Just okay. With your warning.
You can. So. It's good. It keeps the doctor away.
I was actually just reading this month-end FX rebalancing that's in our newsroom. This is the ForexAnalytix chat room. If you guys want to, just if you kind of want to see it, take a little glimpse around. I'm just going to give you I'll give you an example. I'm going to take you over to yesterday, and you can see here. Let's see. Here's a good example. You want to see what I've got running and what I've taken off, put on. Example of losses, gains. You can see, trades that I'm currently running. But it's just not myself. It's all the other, people in our community. You see everybody else posting what they're doing. But we have these like general chat rooms, and this is like the conversations that we have like just in the mornings. This is from when I get up, which is right around here, somewhere around here. This is like an hour ago. Somewhere where I said good morning. I don't know where I said good morning. So, I said good morning right around here. But you can see all the when you're having these conversations, you have threads, like off threads from, different conversations that we're having. Just you can see that there's more to it than just, what you see here. There's side threads from these conversations. So it's a really great place where, and then we have our like S&P room. You can see right here, everybody S&P and indices, Paul Franco's in there a lot. We just got, we've got a lot of conversations going on. So one of the best things about being part of the ForexAnalytix community is having a community that you can talk to traders, and be inside and discuss what's going on. Have an understanding of what people are buying and selling. I don't expect people to follow what I do, because the way I trade the market is the way I trade the market, not the way you trade the market. So, or what Ryan does, or K-Man, or Stelios, or anybody else does. So, being around and just kind of saying, hey, I do like, Blake's thought and idea here. Maybe I don't want to be a buyer of the euro while it's up here at 110.60 and hitting trendline resistance this morning. Maybe I don't want to be long anymore because I got long in Europe. Those are the types of things that cue you into moves. Anyway, I'm glad we have a little bit of time to actually talk about some of the big developments. And it looks like First Republic might be getting taken over. As soon as that headline came out, the dollar yen spiked up immediately. I mean, we went from 133.30 all the way up to 133.80. I'm sensitive to this because I am short dollar yen. So I'm watching as we're in, coming out of this ascending wedge, but trying to roll over. But we are heading into month end. And so Ryan, K-Man, Stelios, good morning. You guys are up on the Flow Show. What's been like the predominant theme that you guys have witnessed overnight in European trade that is worthy of our attention as we head into North America? Ryan, what have you seen and heard?
Well, we look like we were in the thick of month-end stuff, but the spike in yields and the dollar yen over those First Republic headlines suggests that perhaps the market's trading a bit of those banking worries, and that any resolution sees a lift in risk. Take that aside, dollar yen's been looking a bit saggy. Yields have been looking a bit saggy. Obviously got the Bank of Japan coming up, and I mentioned on the Flow Show and in our chat room that I think based on yields alone, dollar yen without the BOJ coming up probably would have been much lower, probably down towards 133s, even lower. I'm getting the itch that if the Bank of Japan stand pat and if we see a rally on that outcome, I think that rally in dollar yen gets sold. If the yield story in the US and elsewhere stays with yields on the soft side.
Yeah, is that your bias speaking, or is that
I know I try to be objective. I am positioned short, but as a trader, I always look at what can go wrong more than what can go right. So you very rarely see me talking my book that way. But we know that the Bank of Japan, and given the comments out of Ueda over the last 3 days in Parliament, that they're covering all bases towards ending easy policy. Obviously, we don't expect anything to happen at this meeting, bar maybe getting some hints towards that. So any actual changes to monetary policy will be far down the line. But as I said on the Flow Show, I don't think we've ever been as close to them exiting as we are now. And
I really want to see that happen.
The market's gonna start trading that way. So even if we get a pop in dollar yen or a yen sell off across the FX space, the market's going to be getting a sniff that something's changing soon, and I don't think a rally in yen pairs is going to last for very long.
And that's the speculation is that they're going to announce they're going to do a review, right? And the change in policy is going to come this summer, June, July, I guess whatever the meeting date is there. So that's the speculation, because they have to do some sort of review. You got a new BOJ governor, and he's not gonna, you have to do a review, right? Like if I'm a coach and I'm stepping into a sports team, probably going to sit down with my coaches, my other coaches, the assistant coaches, and try to figure out, all right, what the hell is the game plan here? Especially on something so big, right? Especially if you're a coach brought in to coach a team that is maybe a losing team, or so if we have Ueda coming in, probably has to do a policy review, sit down with all of the BOJ deputy governors and however many there are, and then figure out what the plan of action is next. So it makes sense that you're not going to get some policy change right out of the gate. At least it makes sense to me. Does it make sense to you guys?
Yeah, I think they were all in agreement that this policy could not continue. But of course, in order to not expose how flawed the plan is, they needed to change the BOJ governor to, coincide supposedly with a revisiting of the plan, right? Because a new person obviously is much easier to implement a new plan, while the other person is tied up to the previous one. But in my opinion, when they decide to try to exit this monetary policy lunacy, there's going to be fireworks. So it's going to be an interesting period to watch.
Hey man, what are your thoughts here?
That came out today from Ueda, something we've spoken about often enough is how do they manage all the government bond holdings, and how does the government manage debt thereafter in a higher rate environment? And, one of Ueda's comments today was that monetary policy is not necessarily going to give two stuffs about what the government has to do.
We've heard that before, but in action, they never hold to it, right? We've heard many central bankers in the past claim that, it's not their business what happens with, fiscal policy and government policy. But when, excuse my language, the shit hits the fan, then we see that, unfortunately, there is no truth to that.
That's a maybe, but it's important in this case right now and what the market is going to do with expectations for the Bank of Japan. Because if they're suggesting that they're going to hike regardless of the impact on the government, that's going to be more hawkish than saying, well, we're going to take it in line with the government.
Yes, absolutely. But let's see if they can actually do it, right? It's one thing saying it, it's another thing doing it.
I'll be trading them saying it. I'll be out, and then I'll be out by the time they do it.
That's right. That's what traders do, right? So great conversation, guys. All right, let's move along to I want to talk a little bit about equities here. So you got the S&P, obviously, when we broke 41.15, it was all over but the crying. It was really quick sell-off yesterday. We bounced right where we figured we'd bounce. And speaking of, Ryan, you want to talk about being objective when you do analysis. This is the bias chart, right? So when this is the bias chart that we build with the ForexAnalytix clients. It's done after this show. It's about an hour from right now. We sit down and go through all these different instruments, and this is the point where when we go through analysis, it's really important to understand that we have to be objective, even though that we're running positions in the market. And you look at the S&P here, and I know a lot of you probably are like, well, hasn't the S&P been bullish? But really, we're at the upper end of the range, and that's not me being injecting some sort of bearish bearishness into the market, because I am bearish. As I've told everybody, like even yesterday, I'm like, look, I'm bearish. I just can't put the bias chart in bearish yet because we haven't really started to break down. But you can see this green line right here, and you can see this is the support levels that were really key at 40.75. I mean, we've obviously bounced a couple of times now off of those levels since yesterday. One of them's right after the earnings. One of them's just now with the First Republic news. This is going to be obviously very key to the market. I did a little YouTube short yesterday about the S&P, but you also have the NASDAQ that's also threatening a little bit of a breakdown. You've got the Dow here that is really at pretty key support at this 33,500. Then you got Russell 2000, which is the one that we should all be paying pretty close attention to. And you can see this is the moves that are happening with the regional banks actually is going to influence us a lot. We have a nice little bearish pennant, but we're coming into some pretty key support in the Russell. I use the analogy of dominoes. You have all these indices. You start seeing them buckle, and this is what I would be looking for. Is if you look at the S&P and it starts rolling over, breaking through some support. You got the NASDAQ starts to break down. You got the Dow starts to push lower. You got the Russell that starts to break down. The next question would be, what else is going to break down? What do you guys think? I mean, because my attention would immediately go to European equities and Asian equities. So you start looking at these U.S. Equities start to move over. What I believe is ripe for a pullback is the DAX. I think the DAX is set up for a move back down to 15K, to some of this, I would call this a support zone. If the US equity markets break down. Anything you guys looking at as far as what might be a mover then? Good.
European equities have been overperforming the US equities for quite some time. And of course, you're right, Blake. I mean, they won't be headed in completely different directions. But in my opinion, the reasons for this overperformance are not over yet. So basically, yes, they might do some catching up, but in general, I would stay with the European equity preference over the US equities. I think they're more vulnerable at the moment.
Yeah, they give you some great opportunities to be in at better levels, I think. So there's you got the German DAX, you got
German DAX practically almost
FTSE.
made it to the all-time high, yeah.
Right. And then there's also the Nikkei, which is showing some hesitancy here at these highs, and with the BOJ meddling around with monetary policy.
What a nice 3 drive up there at the top.
1, 2, 3.
No, right there at the top.
Oh, right here. 1.
No,
2.
the first
No?
to your left is 1.
Here,
He
there,
can't even
right.
count, man.
What? Where? Huh?
Yeah, fuck it.
Whoa! Oh,
No, he said fuck it.
Yeah, what's the difference? Anyway,
It's the Fockers. That's
Yeah.
a funny movie.
yeah, meet
All
the
right.
Fockers. Yeah.
Right,
Oh
exactly.
yeah, I've met him. I've been called one too.
So all right, we got a few minutes before the Dale's interview. And actually, do we have data coming out today? By the way, we had Australian CPI numbers that came out last night.
You want to know?
Thank you. I'm going to I'll pull up the charts for durable goods. Aussie's really underperforming. The trim mean, which is basically the core CPI, came in a lot weaker than expected. That drove the Aussie. And look at how weak the Aussie is. And of course, it's expected when you see a breakdown in copper. We have copper that, I know, Dale, you brought this up a little bit earlier. I actually tweeted about it yesterday. Where the hell did my copper chart go? I had it somewhere around here. I don't know why it disappeared, but that's okay. I'll pull it up. That's weird that I must have accidentally clicked it off. But anyway, if you look at copper, let's pull up. That's fine. We'll just look at it this way. You can see the copper chart here. We broke down through this ascending trend line there. That's like a triangle consolidation. And that, to me, is, you talk, as Dale, you mentioned, talk about global economy. Copper looks vulnerable here, and looks like we're going to break down a little bit. So, you got copper moving lower. The Aussie dollar is just a bearish consolidation. We couldn't even get back above the 38% retracement. So, I mean, if you talk about, you got U.S. equity markets that recovered nicely. The Aussie couldn't even get back above the 38% retracement, which means that is a bearish consolidation. That means that this is going to probably bear flag it all the way back down here. I know I've tweeted about that a lot over the last couple of weeks, but that's all that suggests, is that we should breach new lows and we should trade, in the lower 60s in the days in the weeks and months ahead. So that's kind of what I'm looking at. Stelios, what's
one thing?
On
one thing I want to
radar?
say, I wrote it in the chat room as I did. I've been talking about Norway and the krona for ages and ages. Well, pull up Euro Norway. We almost hit the 61.8 retracement from the 2020 highs to the 2022 lows. That comes in at just under 1173. I've been debating whether to sell Euro Norway or Dollar Norway, and I said to myself, I don't care what the Euro Dollar does, so I'm going to sell both. So I've done a third the position of what I want to short. 1172, just under 1172, and 1066.5 in Dollar Norway, and that's actually going okay at the moment as a pair. And I wanna sell more if it keeps going, but that fib I really like. And well, you have it at 11,755.
You know what?
11,773. Why?
Why? Different platform.
Can I say something?
It's 75 still.
What's that?
Can I say something?
75? Yeah.
Hold on.
You don't care.
No. Hold on.
Wait.
I just sold some too.
Wait.
Wait. I just sold some too. Based on what you're talking about, I'm so with you. If you want to see, an example of my open positions, there they are right there. Here's the current price. You can see open positions. Euro Norway, I just sold it 1170.7078. If you guys see,
okay, so right? If this works out, you owe him a commission.
I'm all about the blame game. If this goes wrong, I'm just
if it goes wrong, then you ask the money.
I'm just kidding. I'm just letting you know, Stelios. Based on your recommendation, I actually put on a little bit of position because I'll trade the 618 fib any day. But anyway, go ahead.
I was just going to say, remember how we've been talking about this for weeks, right?
Yep.
Norway, and it's an example of waiting for the market to come to your level. It might not be the right trade, obviously, and Blake might lose a lot of money, but you have to wait.
Wait.
Wait a second. So you can actually lose money trading?
Yeah. Okay. Durable goods in about 10 seconds, 15 seconds.
Durable goods.
Yep,
Durable or
right.
non-durable, depends on the number.
Hey, John, what's your last name? Dr.
Go.
John and the Night Trippers. John, will you
the
text me?
We have the
Hey, let's
dollar
go.
index, and we have yields right here. I'm gonna durable
it's
goods
stronger.
better than expected.
Revisions lower, but headline
Yeah.
higher. So it's kind of a mixed bag.
Let's see how the S&P is reacting to that. If we're seeing any action there. Here's let's put on a 15-minute chart. Not much of a move. Dollar index firming up a little bit. Yields are popping a little bit. I mean, the dollar yen's just popped to new highs from this morning. But maybe that end of month value date flows that the guys are talking about might have a little bit of an influence. All right. Well, guys, gals, I want to say thank you for joining in today. Make sure you check out ForexAnalytix. You get all these really nifty tools like the data flash, live squawk feed, all the analysis from harmonics, Elliott wave, all the fun stuff. And on top of that, you get inside of our chat room. And that's the heartbeat of the ForexAnalytix community is all of us in there. We don't talk politics and we don't talk religion, and we talk a lot of trading and sometimes Netflix shows that we're interested in when the market's not doing anything. But other than that,
how about this, Blake? May God bless the next renomination of Donald Trump.
Yeah, that's going to be.
We wouldn't talk religion or politics.
I don't want to talk about politics, but
all
man,
right, anyway.
I mean, can't we find can we find two better
younger people?
Well,
it's like
you mean between Weekend at Bernie's and
it's
okay,
crazy.
Anyway,
let's go to the guest.
We don't talk politics.
No, we don't. But dude, these guys are like, come on, let's.
Anyway,
50-year-old.
In all honesty, you
let's
Americans
talk
are
religion.
330 million. I'm
Let's
pretty
talk
sure
religion.
there are better people.
God,
right,
please save America. That's the only religion I'll talk. Please save us from ourselves. All right. Anyway, that's the end of my homily.
Thanks, guys. We'll see you. We'll see the rest of you on the morning edge in about 45 minutes. Thanks.
Okay. Thank you, team. New guest, Dr. John Sinclair. Dr. John, how are you? It was nice to meet you the other day. Asking for you to mute. Hey, John.
Hey, how are you?
How are you doing, buddy?
Good.
So, it was nice talking to you on Twitter Spaces to try and make people aware that you were going to be interviewed here on F.A.C.E. So, welcome here. Really appreciate your time.
Good. Nice to meet everybody.
Yeah, John is a mentor, and he runs a trading room, and he's a writer, and he's a doctor in economics, basically in leadership. So, in leadership, I'm going to let you take over the interview.
Hey, thanks, Dale. I really appreciate it. I'm gonna pull up some charts here if that's okay with everybody.
All right, buddy. What do you think of? First of all, John, what did you think of yesterday's action?
So I thought it was great. Finally, right? We've been in this range, for a long time, and we're still in this range, right? Yeah. So one of the things I have pulled up here, guys, is I've got the quarterly chart pulled up here. I've got the 3-month chart pulled up, and nice. We've had a pretty decent down move since the all-time highs. Right. So when I look at the quarterly chart, one of the things I look at is to see if we have 3 red quarters in a row, that gets concerning. Right. And so what I found is that we tend not to start back to the upside until we can confirm above the last red candle. Right. And so we've been kind of testing, we've been getting close there. But again, that level here, the high here is about 431.73 on SPY. And so it's important for us to get above there. So in the meantime, we've basically been in that quarterly range over the last couple quarters, right? And as we move down to the monthly chart, you can really get a bigger picture of it here.
Wasn't April such a great risk on month, highly publicized best month of the year? Lower on the month.
Yeah, right. I mean, it's literally been like one of the choppiest months that we've seen ever, and it's been super duper risky, right? And so, but one of the big things I liked about yesterday is that we pushed below these candles. And so like, what really cool stuff, there was some nice alignment here. So one of the things that we like to look at is levels. And then once we can figure out where we're at with the levels, then we can look for setups in there, and at least on a day trading side and sometimes on a swing trading side can look for movements there. You know, so when you look at the monthly, we were green, we were above the March level for kind of chopping above there for a while. But yesterday there was this huge alignment here that corresponded not only with the monthly highs, but also with the weekly lows. Last week's doji week, last week was the narrowest range week in over a year, since November of 20.
It felt like we were in the eye of the hurricane last week.
Oh yeah, I mean, it felt like it was like, you know, it felt like it was. And here, and if you go back to November of 2021, we're talking about Thanksgiving holiday. You know, so I mean, it was like there was just nothing happening, and there was no movement. So this so price is just waiting to break out of this range one way or another. Now, right. I'm talking to a lot of people who are like, oh, this thing's going to all-time highs, this thing's going back. But yesterday kind of gave us a reminder that, you know, maybe there's going to be a little bit of pain before it starts doing that again, right?
Yeah, like take out the October lows.
Right, exactly. And so so what we saw here is this was really rough too. At the end of last week, we had this double doji, and then we finished Monday with another one.
Everyone.
Right? Exactly. Yeah. And then finally we gapped down and we lost those. Now look at this level right here, this line. That corresponded with the monthly high, the weekly low, and then this last 3 day range that we've been contending with, that just getting chopped up in this range. And so finally yesterday, now yesterday, I'm going to pull up the intraday, and because that's what we like.
Aren't you grateful that the market has memory and doesn't get Alzheimer's?
Right.
So we could look left and have evidence and important critical areas to pay attention to.
Yes. Yeah. And so that's the key thing. And so it just requires a lot of patience, you know, in this.
You're getting a comment that someone likes your spaceship there, Dr.
Oh,
John.
thank you. Yeah, I do get a lot of good spaceship. So thank you so much.
Ground control to Dr. John.
That's right.
All right.
So yesterday was interesting, right? So we before we got through these levels, right? So here's that level here on the intraday. Before we got to these levels, I mean, we started off the day with another choppy open, right? But one of the things that we like to do at the open, and everybody's got their own opinion of Elliott wave theory, but you know, sometimes it works, right? And so I only like to use it when it works. So it always seems to work after the fact, right? Whenever you're looking at a chart, wait a minute, was that an ABC or a 1, 2, 3, 4, 5? And you know, if you look at, you know, some of the macro theories out there, we could take a look at that on the bigger charts to see where this thing could be going. A lot of times there's a bull count, a lot of times there's a bear count.
Yeah, there's always alternates.
Right. And so, and then, you know, it's funny, and unless there's like no exceptions to the rule, and I've seen one before where it's like, there's no other possible count that this could be, and it still did the opposite, right? So it's like, you know, you have to take it with a grain of salt, but it gives you a framework into price action, right? Into, you know, how things move, right? A little bit of psychology in it, you know, what's going on here. And so we can kind of talk through and reason through that. And then if we get proficient enough at it, then we can really manage our risk and look for a bigger reward, right? So I'm just gonna talk about it a little bit. So an Elliott wave, right? We like impulsive waves, right? We want to catch those big moves, right? We don't like getting chopped up. In those choppy days, what we found is that for the most part, you know, you get some whipsaw action, but for the most part at the open, we've been seeing a lot of choppy action. We started seeing that yesterday. So yesterday seemed like it was going to be a ho-hum day. Not more chop, more chop, more chop. Let's wait till GDP comes out this week. Let's wait till the Fed comes out soon again. You know, it's so funny now, like everybody's like, when's the Fed coming back out? We need some action here. And it's like, no, you don't want to encourage this stuff.
Don't right? You think, let me ask you this, John, it's kind of a theoretical question. Don't you feel that a market, when it makes a big move one way or the other, without a news story being the catalyst, makes it even more significant?
I do. I mean, I just find it to be more enjoyable. Like, so it's like, you know, you're not, you know, jumping on some headline and hoping to, you know, catch a piece of the move. When you just see pure price action happening, it just gives you like, like delectable trading opportunities, right? So so I like that, and I do think they are interesting. One of the things we do, and I know I said do, but like one of the things that we do is we look for significant news candlesticks, right, on the daily chart. And sometimes that can give us a frame of reference for a news event, let's say like a Fed day candle. Like we want to look at that and be like, okay, well, that has positioned itself with something, right? Some, you know, some sentiment. And then we can kind of work around that, you know, with levels. But when you, like you said, when we get a day like yesterday where there's really no news headlines, I think it does show that there's a lot of market participants out there that were getting out, right? And then because of whatever reason, right? And it doesn't matter. The point is that they were selling, and like you said, now you can go back and you can reference that level. So before we get back into the intraday,
so what do you tell somebody who says to you, John, you know, I was waiting for May to sell. You know, if selling May go away, you know, what do I do now? You know, I didn't lighten up. I didn't get short. What do I do now?
You know, it's so hard. It's so hard to look at it that way. I really don't trade on, you know, I just look at the charts, right? I just look to see what it's saying. And so, you know, it's hard for me to say like, you know,
okay. So the point is, you know, people think they're probably late on this move because they didn't get short yesterday, when it could just be the beginning of this.
Right. And then, but at the same time, we're still just chopping around in last month's range. We just got in last month's range, you know, so it's
all
like,
right. I know that's my self-talk I used to hear.
I do.
Go ahead.
One of the things that we do look at is we do pay a lot of attention to option activity, right? So because the market makers are heavily involved in that, and they can push things around. So one of the things that was significant is that Friday was actually an OPEX day, right? And so what we do is we look at the next candle and kind of see how things set up off of that. So Monday was what we call the post OPEX candle. And then, so what happens is after OPEX, all that gamma, all those options, all that open interest comes off the board. It gets cleared away. So everybody's like deep sentiment or whatever, they either blew up or they succeeded through it. It's all gone, right? So it's a reset. And that started 2 days ago, right? That started Monday. So here's your reset day right here. So again, it was another doji. So are we going to go calls? Or are we going to go puts? Right. And so yesterday, since we closed below it without a gap, is one thing that we look at. Since we closed below it pretty strongly without a gap, that sets some brand new sentiment out there. And now we're really going to track and see if those put buyers are going to be able to push things. Now, where are they going to push it? Who knows? We got some open gaps below right here. And like I said, we've got the bottom of this consolidation range. That's a definite area of interest. But like we said, you know, we're basically just back retesting last month's range, right? So until we can break out below there and through these levels, right, the bears are not necessarily in control. They're just pushing and testing, you know. And so I wouldn't say that anybody really missed anything unless you were day trading yesterday and you missed some good short opportunities throughout the day. You know, that's for me. And then I like to see how things hold, and I like to see how these things, you know, go levels. Usually nothing goes in a straight line. So we like to see
yesterday at a minimum change your bias that you'll be looking to sell rips rather than buy dips.
You know, at this point, it's interesting. You know, futures are green right now, so that could imply that we're gonna see a rip selling opportunity here today. Again, I want to keep an eye on these levels. If we can get below, if we stay below 50% of yesterday's range, then, you know, look at that. If we start pushing above that, the bulls might be coming back. I mean, we've seen it so much over the last couple of months that you have a huge green day. It's like, yeah, everything's going to break out. And then, you know, or huge, you know, then you completely reverses with the bearish engulfing candle. Then it completely reverses with the bullish engulfing candle. And that's exactly what happens when we're range bound like we are. So at this point now, it's just it's a lot of tactical, you know, you got to get tactical, right? So as one of my old mentors.
You guys trade anything else besides SPOOs?
We're mostly focusing on zero DTE options on SPY.
Can you explain that? Can you explain zero DTE to our
so 0 days to expiration, and that's a brand new thing, pretty brand new. You know, only like within the last year or so, where they started taking SPX, right, which is your cash S&P index, right, and then you've got your SPY, which is, you know, your ETFs based on the SPX. You got SPY, you got Qs based on the NASDAQ, and you know, you got your RTY, you've got your IWM, right? And so with those now, by 0 DTE, that means 0 days to expiration. That means every day now, Monday through Friday, is an expiration day on options, right? And so when we have a 0 DTE day, when options are expiring that day, options are made up of just a few components, right? They're made up of the intrinsic value, right, which is based on the price of the stock or the underlying ticker, right? And it's also based on the volatility, which includes time decay, right? And so the one thing about options is that's obviously different than holding shares or holding shares short or whatever the case is that those can expire, they decay in value, the premium goes down. And so as you get closer to expiration. And so, but the advantage is if you're a day trader, well, okay, let me rephrase it. The advantage can be, if you're a day trader, is that that theta
no
decay,
premium.
that all that theta is basically almost out of the equation. And now you're dealing with pure volatility and pure price action and pure movement. So if you can get a fast move on the options, the delta, which is the Greek that says that per dollar move, this is how much the option should move based on whatever the current pricing is, tends to explode. It tends to accelerate. And so you can get a lot bigger moves on those if you're trading it right and you're managing your risk. Now, the reason I say that everybody, right, it's an advantage. Well, it can also be a disadvantage, and it's shown, like, apparently statistically, there was just a report that came out that retail traders, since they came out with 0 DTE, are down, are like significantly, like in their accounts. Like I think it was like a broker like interview, like statistical interview, and they literally showed that since 0 DTE came out, that retail traders are losing money, right? And I think it's because they're excited about it. It's 0 DTE. We can really get in and out every day now, and they're just taking hits because they're not seeing the setups as clearly.
They're buying bulges and they're selling declines.
Right.
Do they get emotional? They get FOMO with it. Oh, it's going up, I better get long. Oh, it's going down, I better get short.
Exactly. And that's exactly the opposite of what we're doing. In our live streams, like in the morning. So for instance,
what is that, John, called? ODE?
It's 0 DTE. 0 DTE. So days to expiration. So normally it used to be only on Friday. Like, so right now, most stocks, right? So stock tickers like Apple, Amazon, things like that, their weekly options expire on Friday. So that means Friday is going to be a big day. For that, Friday is typically a big day for trading those. I prefer trading on those days because you don't have that lag. So if you catch a good setup, you can really get that explosive action on the moves, but you have to be able to manage your risk on those a lot better. Whereas the other ones, you can just get you can just kind of get chopped up just waiting for something to move. The premiums are higher, they're more expensive, so you're not getting, your risk reward gets a little bit skewed on those. But on these 0 DTE days, like, they've been great. So I like trade. I mean, you can trade shares with SPY. You don't have to trade options on it. I just enjoy it. And I also enjoy trading futures on it. So I like trading the S&P futures on the NASDAQ, on the NQ, and the ES, right? So I'll do that, and I'll trade options too. And then I'll focus more on stock options on Friday, unless there's like some amazing setup like intraday or something like that. So, but now that we have 0 DTE every day, if you can manage it correctly and you can manage your risk reward, and I'll show you in a second one of the things that we like to look at on that. Like you said, we don't want to buy those breakouts, because once it pulls back, once it gives you that pullback, it's going to cut your premium in half. You're going to lose half of every. So, and we talk about that every morning. It's like, guys, be careful buying breakouts this morning. It's Friday. Be careful at 0 DTE day, because if you buy this breakout and it just pulls back a little bit, if you top ticket, it's going to crush your position, right? And so,
do people try volatility spreads in there where they'll get long a put and a call, and one will compensate for the other one?
You can. It's a lot. They're pretty clever with how they price those things. So it's like they kind of know what's going to happen. So we like to do that on Fed days, right? So on when it hits that 2 p.m. 2:30 before Eastern time, before Jay Powell talks or before the rate decision comes out. We wait for things to calm down a little bit, and then a lot of times we'll look at a straddle where we'll buy both the call and the put, and let's just see if this thing rips or flushes one way or the other. And then you can, because you're like, I don't know, because there's so many theories on Fed day. It's like, okay, well, you always short it when it rips first, and then when it rips all day, everybody just gets destroyed, So, but if you can get a straddle with some good pricing on that, if it does move, and sometimes we do see a lot of those big moves, you can get like a double, a 10x trade on those straddles, which is pretty amazing. We've seen that on a lot of Fed days. Not last Fed day, unfortunately, but we see
maybe next week.
Maybe hopefully next week. Exactly.
Okay.
So to show you what we were looking at yesterday, just to kind of dig in here a little bit, we thought that the chop was going to continue. Now this line right here, this purple line, is that monthly high. It's also corresponding with the weekly low, and it's also corresponding with those doji lows on the daily. So obviously, if we can get below this level, we're seeing that the bears are in charge there. Until then, we're not really too sure. So we started out with a choppy open yesterday, and I'm just going to show you real quick one of the things that we like to do. So, if we do just like I said, Elliott wave, I was like, if we're chopping at the open, I'm assuming I don't look at anything before it. I don't look at the macro count. I'm not like, oh, we're in an impulsive wave 1 on the daily, so we need to go. No, like the open, between 9:30 and 10:30 is where you get your moves. Everything else after that is whatever, right? So this is where the action happens here, right? So, but for the last couple of days and the last couple of weeks, we haven't seen, some really amazing action. But yesterday I was like, okay, we started chopping, we're kind of like, all right, whatever, we're just chopping, same old. And I was like, okay, this is an ABC here. Let's see what happens. And so what we do at that point is we look for an impulsive move, right? And so once we get an impulsive move, then we can assume that's, if we're just finishing up an ABC, we can assume that it's either a wave 1, or a 3 type thing. And so what we did yesterday is we didn't think that we thought we were going to chop all day. But when we saw this candle happen here, we're like, let's get short. Right. So because we're like, all right, here's an ABC, and this could have been, and basically it kind of proved itself out. This could have been a little bit of a, kind of a 1, 2, and we want to see a candlestick confirmation. We're not just guessing. We're like, oh, this might be the end of the wave. You might miss a piece of the move, but you're still going to catch a nice run on that. So here, what we're seeing here is we see this candle right here, big bearish candle. Let's get short right when we break below that candle. And that just happened. And I was like, I was just trying to short to the low of the day yesterday.
Yeah.
I didn't think this thing was going to go down like it did. And so ultimately we got to the low of the day, but we blew through it. And I was like, oh man, that's an awesome trade. Great job. And then so we're just then it started chopping again. Right. And we're like, okay, maybe that was wave 1, right? Maybe, or wave 3 or whatever. Maybe it was and so let's see what the next, so we wait for what we like I said, we like waves C, waves 3 and waves 5, right? Because it's hard to capture.
Tell us why you like C and B. I'll tell you why I do after you tell me.
Okay, because they tend to be impulsive, right? So basically, Elliott wave 1, 2, 3, 4, 5.
They also can be fib extensions of A or 1, which means it's a bigger money. It's more potential as a money wave.
Yeah, and it doesn't mean I know exactly what wave it is, but if we assume, so yesterday we were assuming that we didn't know this was going to do it. So I was like, all right, this could be an A, this could be a B. Let's see if wave C goes. So wave C is usually impulsive, right? So they've got like 3, 3, 5. Anyway, it ends with a 5 wave. So you're going to expect a wave C to be a 1, 2, 3, 4, 5. So when we saw this, we're like, okay, A, B, and then boom, impulsive wave up right here. I was like, oh man, that could be the wave C that we're looking for to get the next wave down. And then what happened is it worked really nicely. So that was basically your wave 4. And then boom, you got this right here, right? Yeah. And then that finished your wave down and just turned into a nice open. So, we do the bulk of our work in the first 30 minutes of the trading day. And then what happened yesterday was rare, because normally between 11 and 2 o'clock, it's some sort of goofy Elliott wave WXY for, why waste your time? Why waste your brain power on that, right? So just trade impulsive waves, because you're going to make money, right? So waves 3, the reason why 1 is rare, because it's hard to predict wave 1. Sometimes you catch
your top or bottom picking.
Exactly. And so the thing with wave C is that it's typically impulsive. And then, like you said, if we're wrong, well, maybe it's just a bigger wave, and then you take advantage of that. We actually had that the other day. We're like, I think this is a wave C down. Let's go ahead and take, and then it turned into like this huge impulsive drop, So what was really cool is this, right? So that was a fun day. But what I want to show you is the Fibonacci's, right? So initially here, Wave 2, right? However you want to look at this, tends to be a 618. And, you know, however you want to label this one, we were actually doing it kind of like this. We're like, hey, this is wave 1 here, ABC wave 2. And look at that, right to the 618 extension, right? Or retracement, right to the 618 retracement. So once we saw this candle, the red reversal candle, we can get short off of that. And then we can ride this next wave down. And then you've got kind of your A, B, C, wave 4 triangle, then your wave 5 finish down there. And so, but we always look for candlestick confirmation, right? And so, because that's the only way, it's the only way, otherwise you're just kind of really guessing. But if the price action confirms your thesis, then you're good, because what do you do?
What's your look ahead for today now, John?
Yeah. Let me show you this real.
And then we're going to, I know you have to,
I got to balance.
Give you some time.
Yeah. So
and show your website.
Here's your stop, right? So, once that candle goes here, you enter here. There's your stop, there's your risk, right? And so, I mean, even if you got to the low of the day, it's a 1-to-1 risk reward. And then once you get follow through on that, you've done even better. You've done better than 1 to 1. So your risk is controlled, right? And that's where I think a lot of 0 DTE traders are missing it, right? And they're not buying the dips and they're not shorting the rips. And so we saw it here. But anyway, I got to get to this real quick. So once we got into last month's range, which is this big line right here, and under the last week's range, things kind of changed, right? And so, and I thought this was great. And because you don't see this every day, right? Normally, like I said, between 11 and 2 o'clock, it's just chop city. But we were like, hold on, right? We're below these, we're back in the monthly range right here. What happens with Elliott wave is that you get these bigger waves with these subwaves. It gets fractal. So an impulsive wave is 5 waves. So there's 5 waves. So then we're like, wait, that's a larger wave 1.
Yeah.
Let's see if we get a wave 2. And if that turns into wave 3, we're having some fun here. And wave 4 can be a triangle, and wave 5 an ending diagonal. So we ended up having a really epic day yesterday. Now watch this. Here's the Fibonacci retrace from the highs of that wave. Look at this. You're going to love this. I'll take off the top one here. Let me get rid of this here. Remove that. Move this here from the highs. Look at this, right to the end of that wave. Boom, another 618 retrace with a very clear A, B, C move to that. So it was downhill. So here's your confirmation candle. It was a big candle, but now you know your risk reward. And if we're talking, we're in the last monthly range and we're losing the weekly lows and we're losing those daily lows below this level. Look at that candle right there. That thing with volume sliced through the monthly highs. Right, so we get short here. So here's your risk, top of that area right there, and your reward is, we're talking now, we're looking for a wave. This is a wave 3, right? So we had wave 1, so wave 3 is never the shortest wave. So we're assuming it's going to be at least as big as this one to get some symmetry. So you get this symmetry right here, and then boom, look at that, perfect. And then you got
probably it was probably 1.618. So John, what's the best way for people to follow you and get involved with you? You want to show your website?
So you can absolutely, so you can follow us here on Twitter. So we've just let me see if I've got this pulled up here. Can you see my Twitter screen?
Yes, got it.
Yep. So you can follow us here on Twitter. It's Trade with Dr. John, and so and my Twitter ID is Trade with Dr. John at Trade with Dr. John, and so we post a lot of great stuff throughout the day. We've got good ideas here, and then if you kind of dig in and drill a little bit deeper, I've got a link tree right here. So if you click on this, I'm not sure if you can see this. Can you see this?
It's coming up, with all the things you do.
All the things, and so this has just some of the work I've done, and the top one is our chat room. So if you want to do that, you can just click on the top of the link tree right there, and that'll take you to our group if you want to join that. You can see again. Here's the Twitter page here. I've got a book. We've got a YouTube page. You can check my trading view videos. We got a morning report and all that fun stuff. So, if you're interested in checking us out, check us out there, or feel free to DM me on Twitter, and if you mention this show, maybe I can get you in for like a 1-week free trial or something like that if you want to check out our chat room. That type of thing. So,
all right, well, you made it, John. You're my trading warrior brother.
That's what I'm talking about. Yeah.
And I tell you, I love your energy. You have to email me a list of the vitamins you take and everything. Your demeanor and your positive, it's contagious.
Thanks,
good
Dale,
to be around people that are up
I hear that. Yeah.
Yeah. So
yeah, we got a good group. We keep it clean. We post a lot of funny pictures of Muppets and stuff like that, and we just try to keep it fun, and just a nice, safe environment for people to talk and to learn, that type of thing. So
Dr. John Sinclair doing what he loves. How about that? And you could really tell when someone loves it. John does. All right, John. Great meeting you. We'll do it again, bro.
Thanks so much. I really appreciate it. Thanks, guys. See ya.
All right, Dr. John and the Night Trippers. Remember that band? Anyway, guys, you could join the team in 15 minutes on the Morning Edge, and I'll see you guys tomorrow. Don't just count your pips, count your blessings. You're welcome, AJ, Anthony, all you guys, Patrick. Good luck today. Sinatra, Joe. Okay, buddy. See you guys. See you, Igor. You're very welcome.